Hello, everybody, and good morning. It is the 7th of September. We are Signal Centre Talking Ball. I'm Joe, Jamie, and Steve. Good morning, gentlemen.
Good
How are
morning,
you?
mate.
Both good?
Morning.
You
Yeah,
all
all
right?
good here, thank you.
Good. Good to hear it. Right, been a bit of a mad rush this morning with various bits and pieces going on, but we're all set and all good to go. So let's get into the latest headlines and find out what's happening in the markets over the last 24 hours. So let's start first of all with the US PMI services that is in contraction. The final US PMI services index for August was revised slightly lower to 43.7 from a flash reading of 44.3 and following a reading of 47.3 in July. So came in quite a bit under the previous reading. But the ISM data indicates solid growth. The ISM non-manufacturing index strengthened slightly to 56.9 for August from 56.7 the previous month and above the consensus forecast of 55.6. There was a slight easing of the supply side difficulties, while there was only a slight easing of inflation pressures for the month. So this really is a challenging thing for the central banks around the world at the moment, and particularly the US. There is a fair amount of conflicting data out there, which is making their job all the more harder. So in terms of US yields, they surged again. The treasuries are on the defensive. We saw stronger than expected US ISM data that had a pretty big impact on the markets, with the 10-year yield increasing to a 10-week high at 3.35%. The yen continues to slump. The dollar is up at a 20-year high. The increase in yields underpinned the dollar and triggered a further round of selling in the yen. Further verbal intervention had little impact in curbing the yen selling. I think the market now seem to be approaching this that the Japanese central bank are all talk and not following through with any action. And as a result, we've seen dollar yen hit 144 before correcting slightly, and the dollar index posting a fresh 20-year high. So we've been talking about the fiscal support for the UK. Obviously, Liz Truss has been installed as the new Prime Minister in the UK, and she did her speech yesterday in front of number 10 Downing Street. There are clear indications that there will be a very substantial fiscal package of at least £100 billion. Felt like Dr. Evil there when I said that. To ease the energy crisis. The UK gilts dipped sharply with the 10-year yield at 11-year highs at 3.15%. So this is another key thing that we've spoken about previously. If yields on government debt are at 3% and above, you have to question whether or not investors are going to take the risk of getting involved in equity markets when they can get a 3.15% rate of return on their money for owning government debt, which of course is considered super safe, although that is questionable as well at the moment. The Bank of Canada is set to hike rates again. They're expected to increase interest rates at their policy meeting later today. The consensus forecast is for a further 75 basis point increase, taking rates overall to 3.25%. So plenty going on in the markets. Feels like a bit of a wobble out there, maybe in certain assets as well. So Steve, why don't you kick us off with Bitcoin today, and we can start off with that and then move on to other asset classes shortly after.
Yeah, sure, mate. Thanks for that. Let me just get you the screen. Are you seeing the screen now? Yeah. Okay. Take a look at Bitcoin to start with, and hey ho, we've actually broken the level. Going to drill down into just the 4-hour time frame, because this really sort of highlights the what I was looking at and what we've been looking at over for a few weeks now. This breakdown, this flag formation, the measured move target being 18,126, which is in front of the multi-year low at 17,600. And yeah, we had the break yesterday. All of a sudden, just after 5 o'clock UK time, market broke the support at 19,526. So we broke out this like rectangle formation, or you could say it was a descending triangle formation. and which is, or whatever it is, it's a continuation pattern because we're in a downtrend, and acted really sort of like strongly to the downside. Just one note of caution here: we tend to find that when we do break a really solid support level or break a solid resistance level, we normally try and retest this level before the continuation lower. So I wouldn't be surprised if we do have a retest at some point over the next couple of days of this 19,500 level, and if it manages to hold and remain below it on a sort of like closing daily basis, then I would say this is we're starting to motor now, and really sort of like strongly breaking to the downside, and we've got some really sort of like decent levels to look at. Take you to the weekly chart to give you an idea of what's going on. We had the original all-time high back in December 2017, just around the 20,000 level, and once price action broke through it solidly in December 20, then we've never really looked back until more recently. So since June, really, the breakdown started. We've tested this support area on multiple occasions, and this is another sort of like really deep test of it. So 17,600, a break of there should open up further downside. I think maybe first initial stop would be somewhere around about the 13,500 to 14,000 level. 12,000 below there, and also 9,000 around that area are sort of other support areas. It's going to be a slow grind. I don't think it'll be ultimately a really rapid collapse. This is just a drawn out process of Bitcoin really realizing its true value, in my opinion, which is a lot less than what we're trading at now. So yeah, that's about covers Bitcoin off, and I think a lot of the alternative coins could get dragged into a similar sort of price action. That there will be sort of like people looking for value coins out there, which you know, which may have some sort of difference in sort of like the fundamentals behind them. So maybe may turn into quite an interesting time for the crypto world. Taking a look at commodities, and we saw gold. Let me get gold. Oh, that's silver. Where's gold gone? Oh no, gold's disappeared off my chart. Let me just get it up for you. Here we go. Yeah, we saw gold price action yesterday was overall it was negative. Let's take a look at the daily chart. We saw a spike higher up to 1726, and then prices moved down, closed around about the 1700 level. This is very key as well. Again, we're retesting the support. It's sort of in line with Bitcoin, and both of them have that common denominator, which is they're both priced in dollars. And dollar obviously strong, you know, new 20-year high, and this has a negative impact on obviously the assets that are priced in that currency. So very much sort of like technically trading based on the dollar. We got a dip down to 1691 today on gold. We've rallied back towards the $1,700 level, so a little bit of a currently a bullish hammer on gold. So it doesn't look too bad at the moment, but I think we've got some really sort of like bumpy roads ahead, really. And again, if we consider this on a shorter term chart, we can see the price action has continued to sort of like be supported by this area of support between 1678 and the 1691 level. So there's a bit of support to get through before we can continue the move lower. Now, if we look at the weekly chart again, we're looking at this as a series support level, and this goes all the way back to March 2020, where we first broke up through it, and it acted as support on multiple occasions. Even sort of like March 21, we saw it in August 21, we saw it earlier this year, July 22, and we're seeing it again now. So the likelihood for me is that this will continue through this level of support, especially with the strength of the dollar, and have a deeper test of where really buyers are going to come in and find value on gold. So levels to watch on a short-term basis, just take you to the hourly chart, really looking at 1691, a little bit of support there. Resistance coming in at 1703. Above that, the previous day's high, 1726. And then we get into the 1745 to 1750 resistance area. Taking a look at crude oil, and this was my gun to the head yesterday, which was a little bit messy and annoying. Again, it feels like it was more of a dollar move, which has shaken me out anyway. However, we've got this level of support in WTI crude oil coming in at around about the 85.40 area, where we're trading now. In fact, I was looking at this potential inverse head and shoulders formation. That's now looking very messy indeed, so we can get rid of that, but there is obviously still the potential for a let me just pop this in here, potential for this still forming a base. So it's really sort of like the things that are going on in oil at the moment. We've got the supply issues, but also we've got the chances of a recession, and that will lead to sort of like a drop in price. The supply issues are looking for the upside really. So got down to a low yesterday on here of around about 84.80, or sorry, that's today. And we're sort of trading at 85.37, so just above there, but a nice bearish engulfing candle yesterday after this rally we had on the 5th, which saw prices get up towards the $90, and now we're $5 lower. So definitely negative on that prices for WTI crude oil. Brent crude oil has touched support. That comes in around about the $91 level, and resistance all the way up around about the 103.25 area. Interim resistance would come in at 96.50. Looking at the market that I know Jamie did a gun to head on this earlier in the week, looking to fade this area. Actually, Jamie, you may have been
Yeah, I
buying
looked to
actually,
buy
did
a
you?
short-term
Yeah.
support, yeah, but it's looking pretty horrible now, isn't it?
Yeah, but you know, it just highlights the sort of like the need for a stop as well. You've stopped out, you know, lost one arm. That's, you know, not the end of the world, because if you hadn't stopped out, you'd be in a lot more trouble now. But yeah, we were really sort of like focusing on more of a longer term plays. We're looking at this like resistance potentially holding, forming a bit of a top. So natural gas, obviously, very much in the news at the moment, but yesterday's price action really saw a decent reversal in this. Support coming in at 757. From the resistance side, really needs to sort of like get back above the sort of like 850 area to sort of like think about retesting that resistance. But at the moment, it's just stalling around this solid resistance area that we're looking at. That's about it for me. Maybe Joe can run us through dollar, and maybe that will give us a few more hints on where the prices are going today.
Yeah, absolutely. So as we mentioned, dollar reached a fresh 20-year high yesterday, and is really showing no signs of slowing since completing this kind of corrective pattern here and breaking to the upside. It has very much been one-way traffic, and we can highlight there that by this very sharp ascending trend line. Now we do have a number of resistances that we've encountered. 109.29 was taken out with relative ease, really. We had 109.77, which is a level we had to go all the way back several years, actually. Let's just refresh our memory there. So that red line dates back to this previous swing high back here in 2002. Then we're facing this black line, which is from 2001. So pretty historic stuff. And we look set to rally into that in the very short term, I would say. So closing above the 78.6% fib level yesterday, just about, and pushing higher today, certainly off of the best levels already in the session. And you wouldn't rule out any sort of minor pullback or consolidation around this region, but ultimately the trend remains exceptionally strong, and it is driving everything else as well for the time being. So let's just take a look at euro US dollar. We can see there that that's holding support at the moment. The previous swing low that we posted on the 23rd of August is holding. We've had a little bit of a look below it on an intraday basis, but from a closing perspective, we haven't closed below it yet. So you wouldn't bet against it looking at this chart. The trend remains very bearish and we are looking for lower levels. So the next major support on Euro USD, if this 98.99 level is broken on a closing basis, is all the way down at 95.95. So pretty, again, historic stuff. If we just go to the longer term charts to find out when we were last at that level, we're scrolling back some way really, back to 2002 and 2001, very similar to what we just saw on the dollar index. So not looking very pleasant on that at all. So looking at cable. So bit of relief yesterday due to the fact that we've got the new Prime Minister installed and the promise of fiscal support. That, however, did wane quite quickly. We did see prices yesterday within quite a large range, topping out at 116.07 before then closing pretty much where we opened, which is not a particularly positive sign. The overall trend remains very bearish. We've got this support level here at 114.10, which was the lows that we reached actually at the height of the coronavirus pandemic, when we saw a massive collapse in the value of sterling versus the US dollar. So that level is relevant from the 23rd of March. You don't really want to scroll back any further to the left hand side because you'll be going for years before you get to the next lowest level. Let's just do it anyway, shall we, for a laugh. So these were the last time we broke below this level, or were below this level, and it was around my actual birthday, which was back in 1985, just 8 days before I entered the world. So yeah, pretty scary stuff there on cable, and showing no real signs of slowing down. So wouldn't back against that actually breaking down and continuing its move lower, especially as we're seeing such strength in the US dollar. A couple of requests to look at currencies linked to the Japanese yen, and you can understand why. This is dollar yen breaking through all sorts of barriers here, taking out the 140 level with relative ease, going well above all major levels. So I think we touched 144. Yep. So we hit a high, today actually, of 144.38. Some verbal mentions of intervention from the Japanese central bank, but again, is this a situation where there's no follow through and the markets know this, so they're not going to do anything particularly drastic, and it keeps driving higher. So much weakness in the yen currency at the minute, so do be careful if you're trying to fade this, because it's pretty much one-way traffic, but also caution buying it as well, because it is extremely overbought, and you know, they may do something at some point, and you don't want to be the wrong side of an intervening move from a central bank. So just be very careful there. With regards to euro yen, not quite at the highs that we've seen with this of late. These two are having a bit of a battle between who's the weakest currency. We are heading towards resistance at 144.25. These are these previous highs that we hit between in June earlier this year. From a technical standpoint, this is actually performing really nicely. So we can see here prices were contained below this resistance at 138.39. We then saw a breakout, we then saw a pullback, and then a lift to the upside. So really nice from a technical perspective, and something that we love to see on charts. So unless there's any other currencies that people are requesting me to take a look at, I will move on to the indices now, and we can come back to FX if anybody wants me to take a look at something else. So let's take a look at the ASX 200 to start. Downtrend firmly in place here. We were maybe seeing some form of a turnaround in the very short term. We got a doji candle posted on the 1st of September. We posted a bullish engulfing on the 5th, but yesterday we posted a bearish outside day, and prices are declining to the downside. We're seeing some pretty strong follow through there, down 0.8% as it stands. And of the developed markets, that's pretty much the worst performing out there at the moment. Let's take a look at DAX. That's down by 0.3% today. pretty stable over the last few sessions, not really moving with any aggression in any direction at the moment. Overall, the trend still remains bearish. I'd be looking for a retest of this support down here at 12,434 in the short term. So we did post a bit of a double bottom back here in July. But for me, it looks like lower prices are set to persist on that. Let's take a look at the FTSE 100. We saw a really nice move higher from this 61.8% Fibonacci retracement level. Yesterday, we were posting higher prices as high as 73.24. Markets may be getting a little bit ahead of themselves, expecting this fiscal package from the new PM in the UK to add some strength to the UK market, but it really turned around quite substantially. And in fact, the point of when it did turn around was when she made her speech, which was around 5 o'clock yesterday. So clearly the market's not too enthusiastic about what Liz Truss had to say. I think the general feeling is it's just going to be more of the same with regards to the Conservative leadership, and she is an extension of Boris Johnson effectively. So not really done much to excite the UK market. Taking a look at NASDAQ. So this was kind of the indication that I was looking at with respect to the UK market. So we cover UK stocks for a couple of companies, and they were asking me whether or not this was the turning point in the UK market. And I wasn't convinced, purely because the US wasn't actually moving in synchronization with the UK market. And typically, if we want to see a rally that we can all believe in, we need these guys on board, because obviously they're a powerhouse in the financial world. And if their market isn't moving to the upside, then you can pretty much be sure that if yours is moving higher, the move is not going to sustain itself. And that was very much the case yesterday with the US markets. Closed lower on the session, actually below this 61.8% Fibonacci level for the first time since mid-July, and looks to be grinding lower yet again. The next major level to watch is the 78.6% Fibonacci level of this up move here, which comes in at 11,611. S&P 500, similar situation, closed below support with some minor support here, and also a short-term uptrend line, which are being tested right now, and for now still doing a job. So maybe that will encourage some bulls to step back in and try and drive the price higher based on these this confluence of support. Not overly convinced myself. I would still probably be favoring a break of this short-term trend and for lower prices to be seen. So that pretty much wraps it up for me on the indices outlook. Jamie, what's going on in stocks?
Thank you, Joe. We'll start off as usual with our biggest gainer and loser. Our biggest loser, I couldn't find any news on this, I'm not sure why, but ANTX, there's an X in the way there, down 32.94% yesterday. This had a really nice break above this resistance level here. Tags the highs we've ever seen on this, actually, or almost got up to the highs before, selling off quite aggressively, and then particularly aggressively yesterday, down almost 33%, as I say. The biggest gainer of the day is ISEE, Iveric Bio Inc., up 66.31%. There was some news on this, if I can get to it. Here we go. Got a trick trading view. Let's get on the screen. Where are we? Here we go. Iveric Bio climbed nearly 66% after Tuesday reporting positive top-line data from a second late-stage trial of its Zimura drug candidate, with the C5 inhibitor producing a statistically significant reduction in the pace of age-related macular degeneration after 12 months compared with patients in control group of the phase 3 study. I feel like I'm resitting an English exam every time I try and break down some of this news, but yeah, nice move there, up 66%. Have a look at the heat map for the S&P 500 yesterday. Not too much to be said. I mean, a little bit of a down day as usual at the moment. Netflix down 3.41%, Tesla up 1.5%. They're the kind of things that stand out to me looking at this. And the big cap names all down about 1%, so nothing too crazy there. Let's jump into some of the big names. We've got AMD has come right back into this 78.6% fib. We noted this a while ago, and it's actually, I've lost my annotations, but we broke out of a nice trend line resistance we had here. It was like that when we saw it. We got the break. It seemed to use it as support for a while, but then it's broken back through it now. And yeah, not looking so good again. A pretty extensive sell-off we've seen here with no positive days in the last 7 trading sessions. So AMD really struggling there. Alibaba, we're at this trendline support we've got here. It's tagged it once, twice, 3 times there, and now we're hitting it a 4th time on yesterday's trading. Having a little look at the volume, not too much to be said about this move lower here, but certainly price action at the moment. We are getting a little bit of a higher highs, but I'm not convinced about this. We've had a pretty extensive sell-off. Maybe it is trying to form a base. That would be the key level. I think we've got to get above this previous resistance at 124. So we need to see about a 50% move to move up to those levels. Quick word on Bed Bath & Beyond, down 18.42%. We'll move on from that. Nothing really too much to say. GME, again, this has been hit pretty hard recently. This wasn't long ago. We're trading up at this $48 level. We noted a bit of a short squeeze coming in, and since then we've fallen almost 50%. Let's actually measure that. I'd say 48 or something. Yeah, 48% down from those highs. Smashing through the 78.6 fib, and like I said, we have got earnings on that today actually. So perhaps we can take a little look at the corporate calendar and look at what is expected there. But coming out after the close, so we'll see how the markets react to that probably tomorrow. Let's have a look at Meta. We're still in this channel we've been in for ages. You could argue there's a bit of a head and shoulders in here. Certainly the psychology of one. It's kind of like 2 shoulders, 2 heads, and a couple more shoulders. But for me, what this is showing is that the buyers again struggling to hold up this level. They can't get any momentum to get it back up to this previous resistance of 182, and we're right by the 61.8 fib again. And as we said a few times, but for anyone that's new to the stream, this is a very significant level because it takes we'll have to go for a monthly chart to really see this. But the lows of Meta right back in 2012 all the way up to the all-time highs, and this is the level we're at now. You can actually see on that, we don't often look at monthly charts, but strong rejection, strong. This you could argue is a bit of a bullish candle, but it's about the follow through really. And so far in September, we've had no follow through, just more selling pressure. So yeah, Meta looking like it might struggle and break through that 61.8 fib at some point. Microsoft, this is really sold off quite aggressively compared to some of the other big cap names, Apple and Amazon I'm thinking of specifically. But yeah, gap lower a few times, some really extensive sell-offs, and what interests me here is the volume, all above this 20 period average on these negative bearish candles. So perhaps people really institutions really starting to sell positions they've got. It's not looking too good, to be honest, from a technical perspective. Let's bring it out to a weekly chart. Pretty important level you can see about here. Haven't closed below this. Let's look at where that is on a daily. We haven't closed on a weekly chart below the 246 level, so that would be one to watch. We are Wednesday, so you could well get there by the end of the week. It would certainly be oversold if it did get there that quickly, but in these downtrends you can see stocks be oversold for a while and keep moving lower, so something to bear in mind there if you're looking at Microsoft. Novavax, another 6% down yesterday. This is the one that keeps on falling. This is another one we've looked at for a long time. Bring out to a monthly chart. A fair bit of scope to move lower here. Significant levels I'm seeing looking at this. We've got level here that could provide some support, 2260, and a bit more support around this $14 level. Price would need to half again before we get to that second support, but looking pretty bearish at the moment. And looking at a weekly chart, you can see the big volume weeks are those sell-off weeks. So yeah, not looking so good at the moment. Nvidia, any updates on this? Not really. We're at this previous, it's kind of a support, nothing too crazy, just this previous low here that's providing some support. Bounced off it on the news of the US limiting the output of its, is it microchips, I believe. But back down to that level again, and you see the volume is still pretty high on these sell-offs, so that's not looking good either. Not a lot's looking good. You probably gathered that by now. Peloton right back down at this support, and I don't know if this has got a technical name, but we saw it a few times. I remember when I think it was Steve was checking out the Nasdaq a while back. We'd have these kind of this sell-off, and then price would jump back above a recent high before selling off quite aggressively, and that's the kind of pattern we've seen here on Peloton. It looked like we had a bit of an inverse head and shoulders start to play out. I don't think it would have reached the measure move target, but let's quickly check it. It would be something like this. Yeah, probably fell a little bit short. That was only a rough drawing, but yeah, sold off pretty aggressively, and back down to support with this bearish looking candle yesterday. So I'd expect to see some resistance at this level. I should say support at this level from buyers, but certainly if you look at the longer term trend, very, very bearish, and still scope to move lower. If we zoom out to a monthly chart, yeah, we've never been to this level before. So whatever the opposite of the sky's the limit is, I guess the floor's the limit. A long way to go down potentially there for Peloton. We'll finish off on Tesla. I'm not sure if we had any requests, but having a look at Tesla.
Tesla was one of them, so crack on, Jamie.
Look at that. Oh, there you go. Look at that premonition. We've looked at this a few times recently. There's a bit too much going on this chart for me. Let's get rid of this stuff. Get rid of some of these fib levels. There we go. We saw a bit of a double top posted. We noted this last week. A breakthrough on this candle here on the 30th. Bit of a retest on this candle. Didn't quite hit our entry. We thought we might try and sell this into this level of resistance here. But actually a pretty strong candle compared to others we saw yesterday. A bullish hammer at this level here. If we get a bit of follow through today, I think if you look at a really shorter term chart, let me bring out the 4 hour. For me, I'd want to see a break of, for a shorter term bit of relief, kind of these levels here. We've got a little bit of shorter term resistance, and if we do get that, potentially then a double bottom on a shorter term basis. But we'll have to see price close above really this candle for me before that's in play. But yeah, I still think there's the scope to move lower here. We've got this gap open from the 20th to 21st of July that could be filled. And yeah, I mean, still seeing, if you look at this in a weekly perspective, we're still seeing the lower highs come in. So first high here, we've got lower high here, lower low, lower high, lower low, lower high. If we follow that pattern, potentially there's a lower low coming. And the next key level for me is around this $180 level, which provided support back throughout March of 2021 into May.
Head and shoulders top, Jamie. If that gets down
certainly
there.
On a longer term chart, sure. Good spot. Let me draw it on. This is what you're looking at, isn't it? It's this here. Yep. There's the left shoulder, the head.
Only potentially at the moment. I'd go down to the that's it,
here.
And then say this is the right shoulder. Obviously subjective, but needs to do a little bit more before we can confirm that's the top pattern. But certainly looks like it's shaping up for it.
Yeah, it does. I mean, and this has got a lot of room to fall for me because of the speed of the move up we saw. So 2 key levels. Look, there's our old annotations before the stock split. Let's get rid of those now. Yeah, the 2 key levels for me in that case, we've got from this head and shoulders we've drawn, we've got this slightly angled neckline. So kind of around 212 all the way down to 206. That's 1 key level of support that the bulls need to get behind. And the second one is kind of where these wicks are down here. That would be like a secondary level, I guess. Well, I guess a third if we include this shorter term support. But yeah, I think on a longer term chart, this looks quite ominous, doesn't it? It does look quite toppy. And if let's have a look at the volume. What's the volume saying? Not too much. I mean, as
declining,
a really vague. Yeah, it looks like it's been coming off this last few weeks, which I guess is a good thing from a bullish perspective because it's been a bit of a pullback. So not too much selling, but as a bit of like I don't know if this is a good gauge, but one I sometimes use just when I'm glancing at volume is what color is the volume that's above the 20 period average, just to give me a rough idea of who's in control, buyers or sellers. And to me there's more red above than green at the moment, so to me suggests there could be some selling institutionally.
Steve,
And
what's
with
the general ruling with Head and Shoulders and volume? Is it that the right shoulder doesn't have generally as much volume as the left? Is that correct?
Yeah, as the volume sort of picks up leading into the neckline, and then the bounce to the right shoulder, volume starts to drop off, and then obviously you get the sort of like the volume picking up when it breaks down through the neckline and confirms the candle.
So that
Yeah,
kind of
it's
works for
sort
that, doesn't it?
of
Sort of.
yeah, that last sort of rally, the volume sort of like drops off a bit.
Yeah, no, I think I mean on a short-term basis, we look at a daily chart, things aren't looking too bad. We're kind of posting these slightly higher lows, higher highs, but that's why it's always important. I always like to do a top-down approach when I'm looking at these charts to get an idea of what the bigger picture is, and as Joe correctly spotted, potential for Head and Shoulders here. But let's keep an eye on these support levels we've got outlined to see if we get that play out. I think
Jamie,
we'll
one
call
more
it there.
request.
Oh yeah.
We had Alibaba, which you've covered, but also
Mhm.
Tencent. Somebody wanted us to take a look at. That was from the TradingView stream.
What do you know what the ticker is for 10 cent?
Yeah, 700.
700. Ah, okay. Here we go. Let's have a look at this. I haven't checked this one out for maybe ever. Okay, so first thoughts are downtrend. We're seeing lower highs and lower lows. Let's zoom out. So we're on a weekly chart at the moment. You see, we've posted a little bit of support at this kind of, where we at, about 300 Hong Kong dollar level. Let's drill this down to daily chart. Again, look at scanning the volume. We've got a few pretty aggressive sell-off days.
I'd say a
Not a
flag
lot I
there,
love here.
maybe.
Yes, that I was just about to outline that myself. So we've got a bit of a bearish flag perhaps forming, something like that. Yeah, I mean, not a lot I love here from a bullish perspective, certainly. We've got a bit of a resistance level here as well, which was support, now becomes resistance. I mean, not a lot to love. Yeah, bearish flag we've got here, and the measured move of that would be, if we do get a break, I guess something, take it from here down to here, and then if we've got a break at this point, is that?
Steve, how would you draw that flag? Would you cut the wicks off of the candles there to?
Yeah, I
Then
mean,
it's more of a
it's sort of,
parallel channel.
well, I mean, yeah, I suppose it is, the main thing would be the support line, the bottom of it. So the flag, the top of the flag doesn't really matter too much. I wouldn't sort of worry about that. I just take the flag pole, when you draw the flag pole from the top to the bottom, and then make sure you take extend that down from the high of the correction. So it doesn't really,
Okay.
you know, it doesn't really matter too much if the flag looks completely straight or parallel. But when you're measuring the measured move target, it's just yeah, drawing the pole down to the from the previous swing high down to the low, and then taking the top of that pole and placing it right on the top, the highest point of the correction, something like that.
Yeah,
That, so that gives you
something like that.
like an area. Yeah, perfect. Yeah.
Okay, cool. Thanks, Steve. So yeah, this takes us actually below this previous band of support which you saw in 2018.
Yeah, I mean that looks like an ideal target level, doesn't it? That previous swing low.
Yeah, this seems like a pretty. I mean, there'll certainly be. I'd have thought unless something crazy happens, buyers will be stepping in to try and defend that level. But yeah, not looking so great. You can see a very. If we bring it kind of back to a while ago, again a very toppy looking pattern, and this plays out time and time again on stops, and potentially what we've been seeing on Tesla Tesla's kind of at this point for me of what the chart looks like, with this left shoulder here, possible head, and then a much kind of shallower right shoulder. Oh no, I don't add another. Something like that, which isn't particularly well drawn, but you get the sentiment change, and after that it's a bit of consolidation before a bit more of a sell-off. So perhaps that's the kind of thing we're seeing on Tesla now. But yeah, for me this is yet to form any kind of bottom, and I think yeah, selling rallies, and I think price moving lower in the short and medium term for me on this one.
Lovely, thanks, Jamie. Okay, just a quick one from Ryan, who's commented on the stream about inverse ETFs. He mentioned TECS, TECS, which is a 3 times leveraged inverse ETF. So basically, it goes up in value if markets go down. So he's talked about this being potential option, and I think these maybe should be considered by investors at the moment, given that there's a lack of availability in terms of trends elsewhere in the markets that we can really rely on at the moment. Obviously, trading with inverse ETFs is risky because it has a derivative element to them. So obviously markets can infinitely go up, but they can't infinitely go down because they can't generally go below zero unless obviously it's oil, which we saw a couple of years ago. So you do need to be careful with these, but they are potentially something you can consider for your toolkit with trading. Now, in terms of the value of buying or selling, I mean, Steve and I have been trading markets for many years, and I think if you asked us what our preference was when it comes to trading, whether we prefer buying or selling, both of us would agree that selling is the preferred method that we like to employ. And one of the main reasons for that is that markets tend to move lower a lot more aggressively than they do move higher. So that's just something that we've sort of found in our trading careers. And that is generally a preference. But of course, shorting is risky. So you do need to keep that in mind. But this is the TEX Inverse ETF. We can see that it's found some decent support around this 28.50 level, and from there we've seen a pretty impressive move to the upside. So obviously moves are exaggerated because there is an element of leverage involved in this. It's 3 times more aggressive than the actual price itself. So that's why we've seen a really nice move to the upside there. Hopefully that was helpful, Ryan. Obviously we'll do our best to cover as many of these things as we can. So I'm going to move this on to the gun to the head trade ideas now. So each day, for anybody new to the video, we pick trade ideas live on this stream that we think can work between now and 9 o'clock UK time. It is just a bit of fun. It's highly speculative. We are just coming up with these pretty much on the fly. Each of the ideas that we come up with must have stops and targets. They must have risk reward ratios in excess of 2 to 1, and all of the ideas are placed at market. If anybody wants to check out how we've done previously with these ideas, it's very simple to do so. You just go to our TradingView profile, which is signal_center, where hopefully you're watching the stream now, and you'll be able to see our previous attempts at these trade ideas. And we keep a log of it all as well on a spreadsheet, and we've been doing this for a number of years now. So let's just recap the ideas that we did yesterday. I was selling Ethereum into a 78.6% Fibonacci level. And I was watching it for most of the day, and it was really quite frustrating because it wasn't going anywhere. But then, as Steve mentioned on his Bitcoin analysis, we did see a bit of a breakdown in the cryptocurrencies, and that worked out quite nicely on this. Sadly, at 9 o'clock, it didn't reach the target. It was only, it was 1.42 R on side, so that was still very
nice.
I
love the way you say only there.
A win is a win, but it did obviously eventually go on to hit the target, and that was at 1 a.m. UK time. So that was a nice one. Jamie was selling Euro Oz. He was looking to fade into this resistance. We talked about it being potentially an inverse head and shoulders. It didn't really break out to the upside, and Jamie at the 9 o'clock close was only slightly offside on this one, but it does look as though maybe now it has broken out and it's starting to move to the upside. But from a risk perspective, there wasn't a lot that we lost on that one at the 9 o'clock close. Steve was buying oil, talking about an inverse head and shoulders potentially playing out here. Sadly, that didn't work. That was stopped out, but because Steve had a very rigid stop loss in place there, he cut the losses quickly. And obviously, if you'd held on to that, you'd be in all sorts of bother now. So really highlights the importance of a stop loss on these trades. So 3 new ideas coming your way. Who has something ready to run with?
Is it okay if I do mine? Because my little choo-choo train bus is going to come past in a minute, so I can get to the office.
Go for it.
Excellent. I'm going to look at gold. Now, gold, this is a really risky trade because we are in this obviously bearish channel looking for further downside. However, we have got this big area of support, which is going to be a bit of a struggle to get through. It's going to be difficult to get through here. But once it does break, I think we'll see prices accelerate lower quite quickly. So from a sort of like a chart formation kind of thing, or a candle, looking for sort of like some real technical analysis reason to sell this, there's not a great deal. So I'd sort of take this with a definite pinch of salt. It's just the fact that looking at the dollar sort of like is breaking through them fresh 20-year highs, and I just feel that's going to continue, which is going to eventually impact on gold. And so it's more of a dollar technical outlook rather than a gold technical outlook. I just feel like we are going to retest this 1679.68 level, and a bit not before too long either. So let me just line this up. The risk reward on this is 2.38 to 1. I'm looking to sell at current levels, so saying $1,700. The stop on this is 1708, which is above the recent spike high at 1704, giving it a little bit of room on the upside, and really looking to take profit around about just in front of the major support at around about 1681. I'll get that published up now, and yeah, so I hope good luck with that anyway. But I'm going to step out now. I'll get it published, and I'll catch you tomorrow.
Yeah, thank you, Steve. Enjoy your day, and let's move on to the next one then. So I'm going to take a look next, if that's all right with you, Jamie, at the Nasdaq.
Yeah,
so looking at the daily chart to start off with, clearly trading in a downtrend in the short and long term. We have fallen below a 61.8% Fibonacci retracement level in the past 24 hours. We have made a marginal new low overnight as well. But we've seen a little bit of a bounce take place. So I'm going to try and sell into that because I still think the pressure is on here for this particular index. I'm actually going to target a move down to this 78.6% fib level, 11,611. So let's just zoom into the hourly chart to take a closer look. So this is the hourly price action. We can see there was a gap on the charts, which was last week. We filled that nicely before then setting off in the direction of the gap. So nice classic technical analysis that's been respected very nicely. If we look at the price action here, we can see this marginal new low that we made. I'm now expecting this to act as a bit of resistance, although it's not really respecting that at the moment as I'm live on the video, but that is the game. So we've got to play it as it lies. It's currently trading at 12,017. I am expecting the sellers to not be too enthused by what they're seeing at the moment and potentially for more downside. So just in front of this 78.6% fib is where I'm targeting at 11,615, and I'm putting a stop loss at 12,144, which is a risk reward ratio of 2.95. It's actually even better now if you were to follow this particular trade, but I'm going to go with the original parameters that I set, and I'm going to get that published right away to our TradingView profile. So please feel free to check it out if that's something that floats your boat today. Jamie, over to you.
Thanks, Joe. I'm actually taking, I guess, the other side of this trade. What you're saying completely makes sense to me, and I do think there's certainly a lot of scope to move lower. But what I'm seeing from a risk reward perspective, and I don't know, sometimes I do these like weird little against the trend trades for talking bull gun to head trades, because I know it's something that will close at 9 o'clock and I can keep a nice tight stop. And if the risk reward's good, you know, worst that can happen is lose 1%. The best that can happen is you make 2, 3, 4. So I'm looking at the Russell 2000 here, and we'll start off on the 4-hour chart. And what I'm seeing is on the RSI, we're seeing some bullish divergence where the chart is making lower lows, but the RSI is making higher lows, so a bit of divergence there. We've had a very aggressive sell-off, as we've been talking about, and to me, I was going to say maybe we get a bounce there. There's got to be more behind the trade idea than that, but we are seeing a bit of buying into this morning in futures, and I think we can get some really nice risk reward out of a potential move higher here. So I'd expect to potentially see something. Well, what I'm hoping for is something like this. We get maybe a bit more buying before the sellers try and step in, and then I'm hoping the bulls will then push it up for the rest of the day, and we kind of close somewhere around here. Obviously, I'll adjust these levels quickly, so I'll keep the stop just under this swing low, and we'll target these highs up here. So kind of hedging our bets today. If one doesn't work, the other should. Yeah, this is, like I say, going against trends. This is certainly a bit more of a risky idea in the sense that I am against the trend, but risking 1% Same as Joe, so hoping for a bit of a move higher here on Russell. I've just moved it and I can't undo it, so let's give you the levels. That would be good. So we're going to buy the Russell at 1789. I take profit will be, like I say, at least this swing high here, so that is at 1829. And the stop will keep just below this this recent low. Cut it nice and quick if it does move lower than that, at 1775. So we'll call it 1776. I don't want to move that low. There we go. So that gives us 3.08R if that does pay off today. So like I say, going against the trend, make sure you have really tight stops for all these trades, limiting your downside. And I'm hoping for a move higher in the US indices today. We'll see how that plays out.
Best of luck. And just to sort of further add to your point there, Jamie, obviously we've both looked at the markets from opposing views there, and that doesn't always mean that you'll get one winner and one loser. We've had it in the past where we've looked at correlated markets and done the opposite thing, but both trades have either been stopped out or hit targets. So, you know, that is, you know, the fun and games of the market. And in terms of counter trend trades, obviously they're risky because you are going against the dominant trend, but they can really pay out if your timing is spot on. So hopefully that's the case for you today, Jamie, but obviously not at the detriment of my trade, which I've just published up as well. Okay, so let's kick on to the day ahead because there are a few bits out today that we need to be aware of. At 10 o'clock UK time, we've got the Bank of England Treasury Select Committee hearing, so we've got just over an hour until that. Could have an impact on anything linked to sterling and the UK main market. At 3 o'clock today, we've got the Bank of Canada policy decision. Now, as we mentioned, the expectation is of a 75 basis point rate hike. So anything above that would be seen as more aggressive and potentially create a sell-off. Anything under that would be, I guess, a bit of a positive for riskier assets and could see prices lift. And then at 5:35 UK time, we've got the Fed Governor Brainard speaking, and no doubt he will be quizzed on monetary policy in the US, and that could have an important say on markets later on. Then we cast our attentions tomorrow to the ECB policy decision. Again, rates are expected to be hiked. We'll cover that in more detail tomorrow. And then on Friday, we've got the Canadian employment report. Hopefully that's been insightful for everybody that's watched today. We obviously love having you contribute to the stream. So if anybody has got any future requests that they want us to take a look at, we'd be more than happy to help. I think we're now closing in on 21,000 views or streams on our TradingView channel. So we really appreciate all the support from everybody. And as I say, hopefully you're enjoying the content. Let's wrap it up for today then, Jamie. Thank you very much, sir. And we will be back tomorrow.
Thanks, everyone.
Bye-bye.